Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This is the Moving Iron Podcast. It's brought to you by the fine folks over at John Deere. Got Machinery Pete back on to talk about what's going on in the world of commodities. I guess that's not your jam, dude. That's the other guy. You're here to talk about equipment. What's going on, man?
Hey, if you want me to talk about commodity prices, yeah, this conversation will spiral quickly. But no, it's good. It's end of March, early April, busy on the auction front. So
That's right.
We're on a fun track and things.
It is that time of the year. It is the last bastion of spring sales that you see come through, and that last little bit getting put out there before it pretty much kind of stops here when you start getting into late April, early May. Yeah. Pretty much dries up, and you see about I don't know, what do you think, about 60-day window there where things kind of really calm down, and then it starts to slowly kind of pit back up in that late June, July time frame.
Yeah, seasonality used to be, before all the online only stuff kicked in 5-6 years ago. There used to really be a distinct seasonality to it. So here in the upper Midwest, you got past early April, and like you say, the faucet just shut off for auctions. But a little less so now. There's online. There's just more going on, and our friends in Canada are a month behind us. They'll catch up in April with a lot of farm sales. So it's been a busy past week, and this week ahead looks pretty busy too.
Yep. So that was that was always one of my things I always pay attention to, is when I first started out, the online thing was just kind of started, when it was just opening the door to Pandora's box there. And, you started to kind of see how things move along. And as you watch things kind of progress now, I've watched a lot of sales happen in, big sales in May, and I'm like, you couldn't have picked a worse time to do it. And actually, they were some of the biggest sales I've, seen happen. And a lot of that is because, you're driving around in a tractor or a combine or whatever that drives itself. And, what do you do with your hands during that time frame? You surf the internet, right? So you come across some stuff you see there. I guess, Greg, as you're watching this kind of thing pack up, are you seeing more movement towards one platform than another as you're looking at combines, tractors, kind of things? Are you starting to see a little uptick in combines, a little uptick in tractors? Like, what are you seeing right now that's driving the auction market?
Well, it's a good question, Casey. I mean, I think there's some trends definitely strengthening in the auction market. One, I would say on the online side would be the evening events, 6 p.m., 7 p.m. Central. Seeing more of those. I think if we would have been having this conversation 12 to 18 months ago, we'd had a few auction players doing evening sales. Now they're more. People are getting more comfortable with it. They're kind of efficient, and you can kind of be sitting at home with the kids or having dinner and keep an eye on what you're bidding on. So seeing more of those, good pricing on those evening sales, I think.
Yeah.
I just think that with, the whole market is more, it's more even now. Again, it used to just shut off. I used to always think about St. Patrick's Day, the auction pricing would start to get softer the last half of March. And that kind of flew out the window 5 years ago with the pandemic. And now it's people are just so conditioned to online that I run into things like I got a video Saturday, Casey, from our friends at Trader Auction. I remember last Friday. The sale was in Wakeman, Ohio. It was a farm auction, but it was an in-person sale. And Luke Trader sent me a video clip. It was of an anvil selling for $2,500. But in his comment, he goes, "Pete, check out the crowd." And it looked like the old days, 15, 20 years ago, a huge auction crowd. I think sometimes now, because there aren't as many in-person sales, when there is one, if it's a sale with good stuff on it, like that was, then you get people come out almost, the in-person sales have always been a little bit of a social event, but now it's like, because there aren't many, they kind of stand out.
Yeah.
No, but no question, the movement is towards online, no question.
Oh, for sure. Things like that too, like that anvil you're talking about, I'm sure that's got a great story behind where that came from and how many hundreds of years it's been banged on and everything else. But it's amazing how something like that can bring people in to spend, bid up $2,500, but they're also there to buy a tractor or whatever else they're going to do, whatever else is on that sell, and using those loss leader is not the right word, but it's the, the draw to bring in those groups. And you see that a lot. One thing I've noticed over the course of my time doing this is that it used to be the late model low hour stuff that was the big shocker at the auction, and the last 5 years, that's not a big shocker anymore to see late model low hour stuff there. But you see some of the stuff getting floated out there is that that pre-def under 5,000 hour, 175 horsepower tractor or something like that. That is the draw that everyone's kind of, that's the promoters out there basing the whole crux of the auction behind this one machine, and everybody either shows up to watch that one sell, or if they can get that one bought, that's great. But there's also might be another one out there that's got like 8,000 hours on it or something like that, and that's actually the one they want. It's 8,000 one, but they think it's going to go cheap enough, and get that 5,000 hour one, and walk away from that one.
Right. Yeah. On that topic of vintage, Casey, I mean, as we're recording this yesterday, so it was April 1st, but our friends at CA Tesh Equipment out of Burleigh, Wisconsin had an auction. They have a couple a year, 2 or 3. And, Chuck, he has a great eye for we call it vintage now, 60s and 70s stuff. But how about these, for examples? He had a 72 John Deere 4020 diesel power shift, 57.5.
Wow.
1974 John Deere 6030 open station had been restored, one for 57.5. For you Alice Chalmers lovers out there, we know you guys are passionate. They had a 1970 Alice 220 front wheel assist. Of course, they only made 100 of those.
Yeah.
That brought 56.5. For you red guys, how about a little V8 action? A 72 International 1468 went for $55,000. And then they even had a 98 John Deere 7810 mechanical for around 4,575 hours. That did 86,000. And then they had a lot of late model equipment too. But like you say, when I see a sale like that, I think it's smart for the auction company to take the picture of that 4020 out of 1886, 1468, and put that up front, because that is the glowing neon sign. Yeah. And then, oh, by the way, we got a 10-year-old quad track we're selling here too, or an 8310R or something. Mm-hmm. So, but those prices, they do show me again that there's still money out there.
Yeah.
We can speculate on the age of the folks who bought that, probably our age and up, but you got to have the money to spend it. So
that's right. Yeah, I think so. Yeah, I think that's those oddities like that pop up that are those hard to find restored kind of tractors that kind of pop up. Like I watched an old 8010 John Deere sell one time, open station full drive, and I'm like, no one's got nothing's like just screaming for someone to die on this thing, because there's no rollover protection that's gonna save you from anything if that thing decides to go anywhere, right? But I young and dumb, not knowing what starting out in the industry, it was one of those things where I watched that thing selling it, and it showed the power of, nostalgia, what it does for you, right? And that's no different than as a kid growing up, my dad would see, he had an old 69 GTO when he was in high school, and every time he saw one that was restored, he stopped and look at it and kick the idea around of buying it, so it's the same thing that goes into those old tractors like that.
What does a smile cost? I mean, we live in a world that we're all so swamped and busy, and there's stress coming at us from every angle. And whatever it is, if it's a hobby you have, if it's fishing or hunting, or golfing, or hey, if your thing is, your favorite tractor when you were a kid, and so whoever bought that 4020 for 57.5, a lot of people say, oh, that's ridiculous, whatever. If that makes the buyer happy, and you can go stand by that thing or take in the parade, how do you put a price on that? You can't. Right. Yeah. And so, that's what I just call that the smile factory.
Yeah. And no, there's a lot of other stuff that gets auctioned off at some of these things, and you look at someone going like, how do you spent $2.5 million on what, but again, you had the money to do it and it made you happy. So there you go. That's how it works, right? That's
the anvil for 2,500 was a good example. I think Luke Schrader sent that to me. Now, Luke is a great guy. He might remember that I've written that my great grandfather was actually a blacksmith up in Tolly, North Dakota, way up in northwest North Dakota. And I think a lot of us have blacksmith roots in our past. Our grandparents, and our small towns we're from. Every town had a blacksmith or 3 or 4. Mm-hmm. So that anvil, the auction crowd in the video was interesting because, like you said before, Casey, you can go to a sale with all late model equipment. It used to be that it was the 2 or 3 hay racks full of chains and, odds and ends. It'd be like, that was where the intense bidding action was.
Oh,
It's
yeah.
like,
Yep.
what was in that coffee can that just sold for what?
Mhm.
But so I don't see that as much now. But when we do run across a sale like that, it just brings a smile.
Yep. Yeah, that stuff on the hay rack stuff, that always makes me laugh because they'll have like 5 of the same thing, right? And they'll, lot number 1, what and then they'll throw it back out there. You can take you split the ring for whatever, 5 times the money or 3 times the money, whatever, And it always goes back in, and the guy that lost ends up getting the second one, but he paid more for the second one than they did for the first one. And it's just like, by the time to get the fifth one's like almost double what the first one went up.
Always, machine repeat rule, man. Always buy the first one.
Always buy the first one. I've said that so many times and watching auctions, and like, if you set it back, if you're going to buy 2, just buy 2 at the same price because you're not going to get the second one for cheaper, typically.
What's interesting through the ups and downs of the ag cycle, it's been interesting. Like we go to a sale and they'll have 3 gravity wagons, and they're really nice wagons, whatever, Brent 440s, and selling choice. So, and again, I've always generally advocated, hey, if you came here to buy one, get that first one, because the other 2, and then usually, half the time they'll say the guy gets the first one, do you want them all? And they'll say yes, and then I turn my head around and I look at all the people, go, oh, no, get off your keister and get that first one because it is the best buy.
You're in position to do all kinds of cool stuff at that point if there's multiple of them, for sure. All right, last thing here as we look into as you start heading into planting season, as you look out there right now, as you see planters come across, I haven't seen that many planters sell this year. Typically, you see more than what you've seen in the past. But what's your feel for the planter auction market right now? Because I don't see what I normally see this last couple of months.
Yeah, it's down a little bit. The other day on our Facebook, Machine Repeat Facebook and Twitter, I threw out a note. I just went into our auction prices on our website and grabbed the last 2 months. So since February 1st to April 1st, every planter gets sold at auction. I don't know if it was like 380 of them or something. And of course, you're going to have everything in there from a John Deere 7004 roll up to a, 17, 75T, late model Kinsey stuff. I think it is like we're seeing across the rest of the market, Casey. If it's right, I think the bidding action is strong. I know I got a note from our, Kurt Miller with Big Iron now.
Yep.
Used to be on the dealer side. Kurt sent me a note last week, and he's like, Pete, look what this planter did on our Big Iron sale. It was very strong. But it was really what everybody wants. Mm-hmm. So again, I think it just depends. I know, on that front, kind of an interesting example today is we're talking April 2nd. Now we flip gears to combines, but the same auction company, Steffes Group, had, they have multiple sales a day. And I noticed this morning down out of Kansas, Ellenwood, Kansas, these were higher hour combines, but they had 3 S770s, and they were the 3 lowest auction price S770s I've ever seen. They were 112, 121, and 121. Now they had higher hours, 32, 3,300 engine hours, 19 and 20 models. But the same day, same auction company, Steffes, had another sale today where they sold a 20 model S780. Now lower hour, 1,317 engine hours. That brought 281. And this sale was out of, I don't know how they pronounce it, Delax, North Dakota. And it was a kind of a farm equipment downsizing sale. But 281 on a 20 model S780, I mean, the last 12 of them that I've seen, 12 models with between 1,100 and 1,600 engine hours, the average auction price is basically like $228,300. Mm-hmm. This one brought 281.
Yep.
So when they're right, they're going high. When they're going soft.
Yeah. Yep. That is the true power of telling the story behind what you're selling, right? I'm sure there was a story behind that one, why that one bought what it did, and it was, and also too, it could have been the thing about auctions. I think this time of year, especially, it's the right place at the right time. And the guy that's been on the fence thinking about, hey, I need to update this or update that. he finally sees the one. That's the one I've been looking for right there, and I'm gonna get that one.
And we're I'm a Minnesota boy, you're a Nebraska guy, so it's like when it gets time the planners get rolling, it's like, hey, is your last shot?
Right.
So I think when Kurt sent that note on that plan, that's a guy who waited. I always figured as a seller, if I was having a retirement sale or a dealer putting stuff out on at auction or consignment, I would have always, after you pass the end of the year, November, December, the Section 179 buyer, you missed that push. I always figured get that sale into February, early March,
right,
before all these other, all these other sales pile in, and one by one, you're picking off guys who are looking for a planter or a combine or a sprayer. So get ahead of the line.
Right.
Again, that's sort of smoothed out with the online thing here the last few years.
Yeah, for sure. That's the and I've always thought too, like the timing of your sale used to make a big difference. And not saying that it doesn't now, but that window is quite a bit more open for a lot longer than it's been in the past.
That is correct, Casey, and especially if you have the right equipment, like that S780 today that brought 281. I mean, that guy, looking at his name, Adam Opland. Now, Adam had great stuff. And if we stay with my friends at Steffes Group, they have a sale tomorrow. I heard John Olson, he and his wife Denise are having this retirement sale. I heard John's a big Machinery Pete fan. So, hey, shout out to John Olson out of Hendricks, Minnesota. But John is selling a 12 model 9460R with 197 hours on it. So highest auction price I've ever seen on a 9460R is like, it was like $281,850. Sullivan sold one a year ago but that had 1,000 hours on it. John's got 197. So, stuff is.
What model did you say it was?
It's a 12 model 9460R.
It's like got 197 hours on it?
197. So again, now when I post that, people, they always say just, the story. Hey, just like you said, what's the story? Well, with John and Denise, they bought it in 22 and it had, just a couple more hours on it. Now, I don't know if they bought that private or at auction. And people, when they run across things like that, 13 years old, I understand it completely, but the initial reaction, people says, oh, no, they're fibbing. That's not. But doing this 35 plus years like I have, and Casey, there's a lot of reasons. I mean, people change their operation. They get sick. I mean, I had a guy call me last year. You probably remember this one, Casey. It was a guy from, I think he was from, Sisseton, South Dakota, somewhere in South Dakota. He calls me up and he goes, hey, Pete, I just want to bounce this off you. I have a 9570 STS with 0 hours on it. And I'm thinking of selling it for, it was like $225 or $250. I think $250. He said, am I nuts? And first off, I was like, hey, dude, why do you only have 0 hours on your 9570 STS? And he said, well, Greg, my dad bought it right before we switched over to no-till. And it always in his head, like, yeah, we'll sell it, we'll trade it, we'll sell it. Well, 1 year goes by, 2, 4, 5, 10, 12, whatever. And, his dad passed away. And I think the guy's name was Adam, if I remember right. So then he's a young farmer, not farming that much ground. And he's like, what should I do? Should I just get rid of it or should I keep it? And he sensed that it would be a double, triple premium item. And he asked me if he was nuts at like $250 or whatever. And I said, honestly, that's what I would ask Adam. So we did a story on it. He sold it that night. He had two full price offers. But again, there are reasons these things happen. And so again, John's selling that 9460R tomorrow, April 3rd, steffesgroup.com. So my eyes will be up there watching that.
Yeah, I mean, that'll be one to watch too, just because that's not even an interim tier 3, interim tier 4 engine. And that's a totally pre-duff engine. Big 4-wheel drive like that. It'll be interesting to watch that one. So
yeah, no, of course. I think we talked last week on the podcast, Casey. Again, I guess this is a Steffes commercial this week, but they had a sale about 10 days ago where they sold another 4-wheel drive on the green side that set a record. I think it was a 9330. It had 6,934 hours on it, and it brought 119, which is the highest auction price ever on a 5,500 plus hour 9330. I think that was by $11,500. So again, when it's right, that just shows the premium But of course, cost of new is pretty high. I'll bounce one thing out you here out of the blue while we're riffing.
Sure.
So all this tariff stuff now, no one knows how it's all going to go. But on the automobile side, when they're talking 25% tariffs, I'm sitting here thinking, I have a lot of friends that sell pickups and stuff. I'm thinking, what's the used pickup market going to do? Could that just go sky high? Just like we saw with the used tractor market 3 years ago? Because if the cost of a new pickup, however much manufacturers, if they don't raise it 25%, if they raise it, 10, they're already sky high, 100K.
Yeah.
If you got to jack it another, to me, I'm thinking, holy cow, this would be a good time to be selling a used pickup.
Yeah. No, I hear what you're saying, because we've been looking for a new car for my wife, and I keep telling the guy that's trying to sell me one, I just need 4 wheels. So I don't need the luxury bathroom and everything in it. I just need to be able to go on the highway. You're right. Everything I've looked at has been like 90, 85,000, 100,000 bucks. I'm like, who does that? But anyway,
who'd have thought?
Yeah, I know, right? So if you look at it from the same perspective, like when I look at equipment, the price, the hardcore trickle down of the price of the new really goes down to about, you can make a hard case that it stops at 3, but I would say it goes to 5 years, right? Where you see people are taking a look at a 5-year-old piece of equipment, what's the new one cost, and then they're adjusting accordingly based around hours and condition, those kind of things. Once you get past that, then you're playing you're playing in a different ball game where, it's you're out past Mars now, you're on your way to Pluto, right? So you're far enough away from the sun, you don't feel the heat as much, right? So I think that's where that thing is. You absolutely will see a jump up in the price of equipment, but not what's on the lot now. And that's where people get missed on the when price increases and prices change and those kind of things, is that what you're trading in might represent a higher price because that's where the market's at. And this is where the dealer kind of gets kind of stuck in the middle is, hey, my price is it's on both on the way up and the way down. My price out here says, $100,000, but trade value is, all of a sudden $100,000 too. So now you're like, okay, how do we make this work? And where do we do that? So you play the game and you go back and forth, and then you end up getting rid of this piece over here and you sell this piece over here, and everything works like it's supposed to. And then it starts going up. What the problem is when those tariffs come off, and now the price of the equipment goes back down 25%. And now your used piece that's on the lot now is 25. It's what we saw happen in COVID, right? You saw 40% price increases and that used equipment followed all the way up. And as soon as that happened, here's your used value now, and that price comes down. Now all of a sudden the used prices don't represent that value anymore because where the news at. And that's all. It's a very delicate balancing act you have to play there.
I'm hanging out today, Casey, with my father, Jerry. I don't think you've ever met Dad. He's 87 and a half, but he's a third generation dealer where I grew up, Little Benson, Minnesota. And I don't even know how we got talking about today, but he was remembering back in the 80s, brutal time. So you talk about swings in agriculture, obviously brutal time for everyone, farmers, dealers, lenders. But he was talking about 85 Dad thought that was as a dealer, was the worst of the belly of the beast, so to speak. And he was talking about combines. And he said, now, of course, there was no internet then, and there was no Machine Repeat or Moving Iron podcast to figure out what stuff is worth. So he drove down to Owatonna, Minnesota, where Gehling auction, Ron Gehling's, Ron's still around. Ron's like probably the most legendary auctioneer I know. Everyone who knows Ron knows how great he was and is. But Ron had a sale. My dad drove like 4 hours just down to go to the auction to figure out what's this stuff bringing. And like you said, it was all on his lot. He said he had 15. He said he had 15 combines and he was sweating bullets because he had 2 stores, 15 combines. Right. But he went to the auction and he said he drove 4 hours home like, those things sold for nothing. But he did appreciate then knowing what they went for. And that's just before I came along, and he advised me, this auction price data is really useful. So maybe you should poke down that road and see what you can do with it. But being a dealer, trying to forecast, you're putting money on a trade in, and is this going to go up? Is it going to tank? I mean, it's a tough. Well, just like farming. I mean, it's tough as hell. But
Yeah, I mean, farming and equipment business all go hand in hand. I mean, everybody's betting on the come, right?
Yep.
You're going to plant something and you hope that you harvest it in
it's
3 or
a
4 months.
business based on faith, isn't it?
That's right.
In more ways than one.
More ways, and then when that money comes up out of the ground, you have a chance to go either get right with your banker, or you have a little extra money to go out and buy something. And we're all hoping that you have a little extra money to go buy something, because
I've always found the saying, make hay when you can make it. I mean, it carries across through life and almost every area that I've seen. But of course, it came from our sector.
Yep.
And that's just farming. And same as a dealer, whether you're selling pickups or tractors or hay balers, or it's the same as a farmer. So,
yep.
Yeah, I'm interested, Casey. We can go deep on this as we go forward sometime. But young farmers, who don't have the rear view mirror of what 18% interest can be in 1980 or whatever, and they think 7 or 8%. Oh, I got 8% interest. It's like, yeah. Well, talk to me about 18% and how you fight through that as a dealer or as a farmer. Yeah. So this is where our generations that came before us, they didn't have the internet or cell phones or social media. The stress they carried through those tough times, a lot of it, they just carried within themselves.
Yep.
Talk to guys at the coffee shop. But now I like to get those guys talking. And it's like, dude, how did you survive?
Yep.
What was it like paying 17, 18, 19% interest?
Mm-hmm.
And they'll tell you. And that's the stuff younger farmers and younger dealers who maybe only saw the go-go days of a few years ago. It's like, dude, hang on, because it'll flip.
Yeah. It'll flip quick when it flips every single time. All right, Greg, it's probably a good place to stop. If folks want to reach out to you, get more intention about, or get some more direction on how to get you to come speak or something like that, easiest place to do that, just go to machinerypete.com.
Yeah, there's a little link on the bottom. You just send our Machinery Pete office an email and say, hey, trying to get a hold of Pete. They zing it right to me, or hit me on Twitter, which I still call Twitter, or Instagram or Facebook. And just thank everyone for their support of what we're doing out there.
You call it Twix. Everybody knows what you're talking about.
Call it what?
Call it Twix. That way everybody knows what you're talking about. All right?
I can't keep up with you, brother.
Twitter X. There you go. Just call it Twix. Twix. There you go. All right, man. Greg, good having you on. We'll talk to you next week.
Sounds good, Casey. Have a good week.
You too. Stay tuned for more Moving Iron after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast. Got Matthew Grassi here, and he's the machinery and technology editor for Farm Journal Media. And I thought, hey, you know what? It'd be great to have him on, talk about what's happening on his side, because stuff he sees is a lot of stuff that I read to get the information to talk about here on this podcast. So I thought, why not just reach out to him and see what's going on? So Matthew, thanks for being on the podcast, man.
Hey, what's up, Casey? Thanks for having me, man. Big fan of the podcast, so I'm feeling like that guy that jumps over the barrier and runs on the field here. I'm out the stands, and I'm on the field with the big dogs. So.
Well, I'll make sure my security guard gets you tackled here in a minute, so that'll work out well.
There you go.
All right, man. Well, a lot of stuff going on. It's that time of the year. We got a lot of technology that's getting ready to get in the field. And as you take a look at what's going on around you, what are some of the big stories you're following right now in technology?
Yeah, so big stories in technology right now. I think you guys have covered it here on the podcast pretty well. Is a lot of these new technologies that used to be reserved for the OEM. Kind of you got to buy a new sprayer to get Exact Apply, or you got to buy a new planter to get the newest downforce or whatever it may be. A lot of these OEMs are taking that stance and kind of flipping it on its head, taking a lot of these new technologies that are coming out and offering them as retrofit kits pretty much right off the bat, or shortly after they release it new. Then maybe 5-6 months later, they're starting to come out with the retrofits. So farmers that maybe they're good with their machine right now, they don't need something new today, but they're still looking at that new tech. They can buy that and have it thrown on an older tractor or combine and still get all those benefits of the new advanced technology. And then spray drones. I mean, Casey.
Yeah, spray drones, man. Yeah.
Yeah, those are. Had a couple farmers talk to me this off season about like, I can't afford a new sprayer, but shoot, I could buy 3 of these new XAG spray drones, and I guess you can link them all together in a swarm to cover more acres at one time.
Yeah.
And instead of relying on the co-op, or maybe your sprayer can't get in the field because of rain or whatever it is, boom, I can get that fungicide on right now when I need it. Yeah.
You have a lot of spot spraying and those kind of things, hitting those troubled areas that you can get out there and get doing. Yeah, that's the thing. I went to a couple shows last year, and it's been a while since I've been to a farm show. And I was walking around, and I was, sitting going like, man, this is like the 9th or 10th drone company that I've seen out here. And then on top of that, there were about 9 or 10 different companies that had accessories, or whatever you want to call them, attachments and those kind of things, like drone trailers and stuff for your truck and those kind of things. And that industry really just kind of shot up and took out of nowhere. I mean, drones have been around forever. And I mean, when I worked at dealership, there's a drone that we were selling that was a big, 8 blade, big, huge deal, carry whatever it was, 15 pounds or whatever it could carry. It was a big investment. It was a $25,000, $30,000 something, and I was like, who would ever buy that? But then, now you go out and see these things, and they're everywhere. And the drone technology that's out there now, and not just necessarily the spray technology, but the aerial technology that you can get that measures, the temperature of the plant, or it can tell if there's bugs out there, and it can tell you how, what your emergence is, and all these different things. They're getting to become a bigger and bigger part of the overall landscape of technology on the farm.
100%, man. I couldn't agree more. And like, if you're waiting for these bigger drones, like what's out there on the market right now, you're like, I'm just having to swap batteries too much. I'm having to refill the tank too often. Just wait, just give it some time. Like, these things are coming. There's a company out of California that they're doing these. Basically, they look like the little private planes that you might see at one of these smaller airports. Yeah. But they're completely unmanned. They got a spray boom that's pretty wide, goes out spans the whole wingspan, and they're 70 gallons and up, and they got longer flight times, and they're saying you could cover 200 acres an hour. So, I mean, if it ain't fitting your operation now, I mean, just wait 3-5 years, and who knows what's coming out of the pipe, I feel like.
And that just like technology, most time, you're going to get a bigger payload and more battery life, or, if it's a gas engine or whatever it might be. You're seeing more and more of that come through, where what cost $5,000 10 years ago would cost $5,000 today is significantly better and bigger and everything else. So it's just that wave of technology and prices that comes through.
Yes, sir. Yes, sir.
It's a very unique scenario. I saw a lot of spray trailers out there that were really very cool. Like this one had, you could put 4 or 5 drones on there. Each of them had their own spot where you could refill and those kind of things. On that accessory side of the things, that was a very cool niche to see that market start popping up, and you start seeing beyond just the sprayer, the amount of dollars that are associated with the sale of one of those things. And again, it gives you that opportunity as a dealer, if you're out there looking to expand your portfolio, it gives you a good opportunity to do that. So it's, the drone technology thing is, like you just talked about, it's going to get bigger and broader and do more things. If you can have one of those things that covers 200 acres an hour, I mean, you're rivaling a traditional sprayer at that point. You know what I mean? Like it's very, very unique what you can do there.
And I mean, of course, sorry, I was
going to
say, like, of course, man, you they say you can cover 200 acres, but you got to have that trailer set up perfectly. Sure. You got to have your whole, you got to have like your system so dialed in, but it's possible.
Yeah.
That's what
Yeah.
they said.
When you're looking at the AI side of the stuff that you see coming through, that's another big thing where you're starting to see, different recognitions of weeds versus, crop plant, those kind of things, and really paying attention to what that looks like. That's a technology that went from being some very, caveman-like stuff to now you've got some full-blown, we can see what's going on out there ahead of us now as we start working through that. On that front, what are you seeing? Are you seeing some big movements coming that way?
I am, Casey. Like I'm seeing you got the chat GPTs out
Sure.
there and this generative AI stuff, making crazy pictures and fun stuff on the internet. But in farming, I mean, this AI is really coming in and helping agronomists and a lot of these larger farmers get their arms around these giant data sets, whether that's, I mean, if I'm a farmer, I'm 5 to 10K acres or something like that, or even a little bit smaller, and I'm trying to scout all my fields, do stand counts, all that stuff. I mean, those are gigantic data sets.
Yeah,
and the
they are.
AI, they're feeding these images into their AI systems, and the AI is telling them, like, forget about this 40, you're good here. But these 3 spots are like where you need to do something right now to save yield or whatever it may be. Maybe it's you got a bad stand and you need to replant or think about some type of other shift in what you're doing there. But that's one of the ways that we're seeing a lot of it. And then another place where it's really coming through is with there's a lot of companies working on this integration with imagery and AI and then sprayers and almost instead of driving your sprayer over the whole field, they'll come in, they'll fly a drone over the field, they'll take those images, feed it through the AI, and then they'll build a shape file, push that to your controller and your sprayer. And they say now your sprayer will know, okay, I can skip XYZ number of acres or this field here and just go straight to where the weeds are and get spraying.
Wow. That's a game changer. We start thinking about that. You got a 200-acre field and only 70% of it needs to be sprayed. And then you can spot spray that on top of that. That really trims that cost down quite a bit.
But I mean, what are we going to do with all these farm and like these ag retail interns and stuff this summer? Like these guys, unless they're flying drones, like I don't know if they're going to be walking acres like back in the day when I got started in this business. So.
Yeah, they're going to fly a lot more drones and walk a lot of acres. I think that's
there you go.
The transition that we see happening. But I'm sure they'll still send them out in the middle of the cornfield on the hottest possible day. They can go out there and watch them sweat. So
what do they call it? I guess they got to ground truth it though, right? Like you
That's right.
see it on the imagery, but no, get your butt out there and make sure that's real. What's happening.
Make sure that's what we're actually seeing. So yeah, trust but verify. That's right. That's right. Well, Matthew, appreciate you being on. If folks have something they want to talk to you about or an idea for a story to lead up on or something like that, what's the easy way for folks to get a hold of you?
Probably best way is email, Casey. You can get me at MGRASSI. That's my last name. So mgrassi at farmjournal.com. Or just keep up with us on agweb.com. That's where you'll see a lot of my stories on tech and machinery. And I think if you just click my name on a story or something, you should be able to find me and get a hold of me that way.
Right on. Well, appreciate you being on the podcast, man. We'll have to have you on the back again here and see what new kind of stuff we see popping up.
Man, I really do appreciate it, Casey. Think you guys are doing a hell of a job here. So thanks for having me. Would love to come back on anytime you need me, brother.
All right, man. Appreciate that. Stay tuned for more Moving On podcast as we continue down this path of technology and machinery.
Well, there they are, mocking you.
See you next year,
Loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Hello and welcome back to Moving Iron Podcast Markets. I've got Sean Hackett with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the world of commodities. Sean, how you doing this morning?
I'm doing pretty good and look forward to being on the show as always.
Yeah, love having you on, Sean. Last week you were on talking about some stuff you saw with this sudden stratospheric warming events that were coming. And you talked about some of this weather pattern we saw. We'd see some violent weather come through, lots of snow, those kind of things, and how that would track into what we saw happen and what you see happening into that late April, early May time frame as some colder temperatures creep into the forecast. So, Sean, I guess a lot of that stuff is happening like you talked about. So I guess give us a little update on what you're seeing happen with that so far.
Well, there's as we had mentioned, there's a strong correlation when you get a strong one of these big warming of the Arctic air in the stratosphere. 30 to 45 days later, you start to see the leading edge of the weather impacts. So the SSW event originally reached its peak about a month ago, and it finished its peak this past week. So when you run the numbers through on 30 days, we would start to see the leading edge start now into the middle of April. And then if you then move 45 days out, we're going into mid-May, and we're starting to see very cold air coming in. The first round of cold air coming in fact, looks like the center east of the country, center north, looks like we're going to be getting temperatures down in the mid-20s at least. And of course, we're getting some extremely violent rainfall and storms where the cold meets the hot. They're talking about anywhere from 7 to 15 inches of rain in the core spring winter wheat belt, in that eastern core there. And so, all this is the leading edge of the beginning of more of this kind of thing. When you look at these types of events in the past, there's been, as we said last time, there's been about 6 of these since 1950. The coldest air has tended to be in the latter part of that 30 to 45 day window. So we're really looking for the major frost potential to really kick in late April into the middle part of May. And that's really where the maximum damage and the maximum issue can come, because if you think about it, if you get corn planted now, it starts emerging late April into mid-May, and you get a frost over the top, most of that crop is going to have to be replanted, maximum collateral damage. We know that winter wheat is most vulnerable when it's in the growth jointing phase, which occurs in late April into the latter part of May, where frost is most damaging and most detrimental to yield formation, and where the temperatures need to be the least cold in terms of generating that damage. I think if you get into mid-May, you only need like 29 or 30 degrees to create serious frost damage, where today you really need temperatures 20 to 25 to do that similar damage, because we're not as far enough along in the process. So this is exactly what you would expect to see if we're developing that teleconnection of the translation of what happens to weather 30 to 45 days out on the SSW event. And even if you look overseas, Russia, Ukraine, and even Eastern Europe is seeing cold air coming in as well. So the way I look at it is the clock has been turned on, and we need to be very vigilant here, because if we're correct about what is to take place, we think we've made an important low here in grain markets, and we think we're starting to turn up, and if that's the case, we could be looking at some really good cash selling opportunities in the month of May, like we saw last year. We got through the report, no big surprises. We're going to get through tomorrow, which is April 2nd, on all these tariffs, the Liberation Day, everything that's about to happen. Monday was end of month, end of quarter. So I think all that negativity, that selling the rumor, might be behind us, and we're ready to trade what we normally trade this time of the year, which is the weather.
Right on. Okay, so let's talk about wheat while we're there. You see a lot of volatility in hard red winter wheat right now. As you're watching things move along, you're seeing slides in the day where between 4 to 10 cents intraday trade, and then you look at day over day trades, you're seeing the same kind of action. Is this what you're seeing in the wheat market right now? Is this what we're talking about right now? Are you starting to see that first onset of a market coming in, or is there some outside factors there that are playing into that?
Well, I think it's the same outside factors, tariffs and the report. The report for wheat, generally speaking, was actually probably the most constructive of all the markets, meaning all the winter wheat acreage were lower than expectation, especially spring wheat, Minneapolis spring wheat, which is about to be planted. So that was constructive. Hard red winter wheat specifically, however, all this heavy rain, which is not good for SRW wheat, has been filtering in a little bit into some of the core HRW areas, which is negative, right? I mean, it helps the crop. It puts some rain into some of these parched areas. None of it was like a game changer. None of it was we solved all the world's problems with the drought in Kansas or the drought in Oklahoma, but it provided a little bit of rainfall, some rainfall that brought some of the weather market speculators to sell the HRW market here. But when you really get through this next 5 days to 7 days, there's, according to our work and some of the models that we're looking at, there's not a drop of rain for the rest of the month. So I think we're going to quickly move back into a drought worry for the HRW market while SRW tries to determine how much damage was done from these incredible rains. I mean, and if you look at it, Casey, if you look at the strip of 7 to 15-inch rains that we're talking about, it's absolutely bullseye into the core of the SRW winter wheat belt. I mean, this is, if you had to, color in the worst possible spot to put this kind of rainfall at this time of the year for maximum collateral damage, that's what appears to be about to happen. It may take a little while to figure out how much damage, but there's no question this is going to lower SRW crop production from what was expected prior to this week, on top of whatever frost, if we get one, might do it. So that already, from what we can now almost assured say is going to happen with this rainfall, at least for SRW, the crop is getting smaller for sure.
Right on. Okay. Let's talk a little bit about ethanol for a little while. I've talked about that for a while on the podcast. As you're looking at what's going on with ethanol right now, where do you see that? Crush rates are expected to be down. This crush report, I haven't seen what the crush report was for today when it came out, but I guess as you're looking at ethanol, what are your thoughts there?
You know what? I don't think ethanol is going to change a whole lot. I mean, if you look at it, we've been burning through 5 million bushels of corn for years, and we really haven't been growing it much. It hasn't been falling much. I don't really think we're going to, crush up a whole bunch more than 5 billion bushels of corn, or crush much less than 5 billion bushels of corn. I did see that the government was investing a ton of money, hundreds of millions of dollars in Iowa and elsewhere to promote ethanol capacity, promote the idea of increasing the ethanol percentages in gasoline. That may have a positive effect over the next few years of adding maybe some extra bushels onto that typical 5 billion that we crushed through. But overall, I think the worry was that under Biden, we could see those 5 billion bushel of corn consumption for ethanol fall down because of the push towards green energy, alternative energy, and electric cars under Trump, at least for the next 4 years. I think that fear is gone, and we can be fairly rest assured that we're going to be crushing at least 5 billion bushels of corn through his administration, and possibly bump it up a little bit. So I don't see anything terribly negative on the ethanol side. If anything, there might be a modest positive with some of this investment news that it looks like the government's going to be putting in to kind of firm up the ethanol side of the business just a little bit.
Right on. Okay. Lost my train of thought. You need a second here. All right. As you look into, you talk about Europe. Wow. As you look into Europe and you see what's happening there, you see issues in Europe. You see wheat production that's lagging in Australia, and we start looking through there. What's the next domino to fall, you think, as you're looking at the wheat market? I mean, if we get to issues here, that's going to be a big thing, but how much is the European wheat market and the Australian wheat market going to play into what we see happening overall?
Well, I mean, the U.S. the Australian wheat market, we're in this place where we're getting ready to plant it now. So we just have to follow the weather there. Right now, they've had 50-year flood in some spots. So we have to look to see if that kind of rainfall were to continue and delay the planting of the wheat over there. Obviously, for Russia, Ukraine, we're very, very worried about another year of cold weather risks and frost. We already know that the crop went into dormancy last year because of drought in one of the worst conditions seen in 50 years. And that continues to be the case. We know that last year's European wheat crop was awful. They're sitting with very, very low wheat stocks. And so obviously, they need to have better production this year. So once again, it still comes down to, following weather. What I think, the way I'm looking at things, if we're looking at the grain markets as a whole, a couple of things absent of wheat, beyond wheat, Brazil is just not going to have they're not going to have a good second crop corn. It's not going to be very good. I thought it would be better than last year. Now I'm thinking it might be similar to last year, maybe only marginally better than last year. And it's just not going to help the tight corn market, meaning the whole world is going to really be relying on the U.S. to have a big corn crop. And so that's going to keep the corn market on edge, especially if we have a cold, frost-laden late spring season, delayed planting. And if we have some serious drought in the month of July, like our models are suggesting, we think that we could. And very interestingly, and we've mentioned this many times, for soybeans, which have arguably not very good fundamentals, there's just plenty of soybeans in the world, but this tariff situation that appears to be ready to hit the ground running tomorrow appears to be going to very, very severely restrict the import of used palm oil, which has been used extensively for making renewable diesel here in the U.S. If that, in fact, happens and we lose that feedstock and we have to then use U.S. bean oil to then make the mandated renewable diesel in the country, that would create a huge short-term demand for soybeans, for increasing the bean crush to create more soybean oil, to create more renewable diesel. If you look at today's action, Casey, significant update in soybeans, significant update in bean oil. We're starting to see the market beginning to figure out that maybe this is quite positive for domestic demand for soybeans and for bean oil, which, as you know, has been a missing ingredient for over a year since the Biden administration, when they were in office, backed away from the whole renewable diesel support and really threw a curveball into what had been expected to be a strong domestic demand for soybean crush. So that's a story that could tip the scale on soybeans to being less bearish and more constructive than we've seen in quite some time. And I think today's price action is a wake-up call that we need to be paying attention to that dynamic, because if true, even if we get no increase in renewable diesel production and consumption, we just replace one for the other, it's a huge demand base that the current USDA balance sheet are not accounting for.
Right on. Okay. Lastly, Sean, you look at the protein markets. Cattle and hogs both had a good week so far this week. As you're looking at what's going on there, what are your thoughts?
We have no cattle. We're not going to have any cattle. There's not going to be any cattle for the foreseeable future. We've added on as much weight as we can to these animals in the last couple of years. And demand still seems to be strong enough to where we don't have enough animals coming to the market to satisfy that. So any way that these tariffs limit the import of animals, cattle, into the country that we rely upon, it's going to make the situation even tighter. Abject and absolute financial crisis or severe recession. It's just hard to see how, it just seems that we have not gotten prices high enough to get demand down enough to balance the market until we can figure out a way to get some more animals into the country, or find a way to get the reproductive cycle going with retaining heifers and that sort of thing. In terms of the hog situation, I really feel that the market is, I think the market, if you look at what's going on in Mexico, they're in a mega multi-year drought. It's as bad now as it's been for the last 3 years. It's been a mega drought. They can't grow any corn. They're not growing any feed. They're having trouble feeding animals. They're just they're in a crisis due to a I call it almost a Gleisberg type 1930s style drought in the core agriculture areas of Mexico. They do not have a choice, in my opinion, in our opinion, than to buy all the corn from the U.S. that they possibly can, all the pork from the U.S. that they possibly can, all the dairy that they possibly can, tariff or no tariff, tariff war or no tariff war. I don't think they have a choice. And I think in the hog market, there's been this fear about, not selling pork to Mexico, who's our number one buyer of pork. And I just don't think that. I think the market is becoming to realize that that's not likely to happen. And I also think that there's talk that Trump and Xi Jinping might be meeting here in June to potentially rekindle the prior trade deal that they had signed when the last time he was president, or to rejigger it, or to extend it, or to modify it. And obviously, as a part of that, you would have to believe selling a lot more pork to them would be a part of that agreement. So I just think that the market is softening their view about what these tariffs mean for pork specifically. And quite frankly, we're not growing the herd. Supplies are fairly tight. And I don't see that really changing for the foreseeable future as well. So overall, I think the pork market looks constructive. If you look at a long-term chart of pork prices, we've been developing a multi-year wedge pattern, which comes to completion here by the middle of the summer. We know when that happens, Casey, one of two things are going to happen. You break up or you break down very aggressively when you enter the cone of those wedge patterns. I'm sure you've seen those patterns many times before. Obviously, I'm advocating the idea that I think the likelihood of what I've just said says that we are likely to break that to the upside. Any confirmation that we're breaking out of this long-term wedge pattern would argue for a more dynamic move to the upside. So we're feeling very constructive for the back half of the year that U.S. and North American hog producers are going to see better prices and some profitability being brought back home on the farm.
Good stuff as usual, Sean. Folks want to reach out to you, get more information on what you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. We also put a lot of stuff out on our Twitter page at Paradex11. Want to remind everyone, we don't sit on our computer posting things all day long, but every once in a while we do put some stuff out that your listeners and viewers might find of interest.
Right on. Well, Sean, I appreciate you being the podcast, man. Look forward to having you on again soon.
Look forward to it as always, Casey. Should be a wild year as always.
Yeah, plenty of stuff to talk about for sure. I appreciate you, Sean. We'll catch you again next time. And with that, we'll have more Moving Iron podcasts after these great messages.
Well, there they are, mocking you.
See you next year,
Loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Hello, welcome back to the Moving Iron Podcast. I got Timothy Walden from Parallel Ag with me on the line here, talking about what's going on in the world of equipment. Timothy is with you're the used equipment manager, or are you remarketing manager?
I'm the used equipment manager and the remarketing manager for Parallel Ag Southern Plains.
Right on. That's such a interwoven term that I always ask that question because I never know who's used equipment manager, who's remarketing manager. So yeah, but it's good to have you on, man. I know Timothy for a while here, and he's been a good resource when you start looking at what's going on. But as we get into that, Timothy, introduce yourself and Parallel Ag.
So I'm Timothy Walden. I'm the used equipment manager for Southern Plains region for Parallel Ag. Been in the business, started in 2016 with Livingston Machinery originally, and then folded into Parallel Ag with that. So been doing agriculture equipment, I guess now, for everything from parts, sales, management into used equipment now for almost
Most support
years.
job, all of them. Most important job, all of them, Timothy. You're where all the action's at, as far as I'm concerned. So that's you keeping Sean out of trouble.
You know what? He's tough to wrangle, but he's good.
Yeah, I like Sean. He's a good friend of mine. We go way back, talking a lot about stuff that's going on there. But I wanted to get you on the podcast just because of where we're at and where things are. So Parallel Ag, the old Livingston Machinery, that was Big Baler USA, still is Big Baler USA. Got all the big balers running around down there. And I wanted to come on and talk a little bit about that kind of that, where we're at with that kind of that marketplace, as well as get a feel for where you're at, because you are in your part of Parallel Ag. Where you're at right now is Oklahoma Panhandle, Texas Panhandle, West Texas, North Texas, all those that kind of key wheat growing area, irrigated alfalfa, those kind of things. So I wanted to get a feel for what you're seeing out there as we go from there.
Yeah. So the big thing right now is rain. Of course, you never want to wish a drought on anybody, but drought drives up hay prices.
Yeah.
And that's the rain is much needed. We do have a very minute amount in the forecast coming up, but we're very shy on rain. Overall, if we can catch some rain, the wheat will come off pretty good. But they're go ahead.
No, go. Keep going.
Okay. So baler sales are slow though. Even through the end of last year, the big balers have been very slow to move, especially anything high baled. And when I say high baled, I'm talking anything 30,000 bales plus. A lot of our wholesale markets, our export markets, have gone to almost zero on those high bale balers. China helped us out for quite a while, and they've not been able to move much to them in the way of the XT balers for quite a while. Very minimal, anyways.
Right. And just so we're all on the same page, Parallel Ag is an AGCO, Fendt, Massey Ferguson, Heston, Beeler. I guess so. Is it still? They're just Massey Ferguson balers now, right? Heston, right?
Yeah, Massey Ferguson balers. Yeah.
That's right. Yeah. So all those things come into play when you're looking at the scenario that you're in right now. So if, just like us up here in the Panhandle, Nebraska, we're always feels like we're 30 days from a drought, no matter what. You get 6 inches of rain today, and if it doesn't rain anymore, we're in a drought situation shortly thereafter. But as you're walking through this stuff, I mean, dry climate, cattle prices being where they're at, hay prices are going to start to like you talked about. You're going to see some drought situations that could cause some situations with hay. Start looking at dairies and those kind of things. As you talk with your customers right now, what's the feel that you have from your customers? Is there some cautious optimism? Are they pretty positive about the rest of 25? Or are they pretty down in the dumps? So what's your thought process?
I'll say a lot of them are pretty down just because hay prices are so low. Those that bought, whether they bought through COVID when everything's higher, even kind of there shortly after, still hanging on to their equipment. The guys that are looking to trade, the trade differences, that gap is so large that they're and when they're staring down hay prices, there's a lot of hay still sitting out there right now. So they're kind of down as far as their overall attitude, whether it's selling hay or purchasing equipment. They're kind of hanging on, leaning a little more into parts and service more so, or rebuilding their balers and running them a little bit longer, because at this point the trade gap is so large that their parts is significantly cheaper, and they think their input cost for another year to run will be a little cheaper than that trade gap.
Yeah. So when you're looking at these big balers, like what's an average year worth of bales? Is that a 7,500 bales? Is it 10,000 bales? What's an average in your area?
Honestly, it can be 15,000 plus. It really depends. We have a lot of custom operators that are baling everything from wheelage to corn stalks and grass and alfalfa in between. And then we have guys that are baling just grass, baling just hay or alfalfa. It's really a mix. You have some guys that they might only put 5,000 bales on a baler a year, but they're going to run 2 or 3 balers. And then we've got some guys that are going to put 20,000 bales plus a year on. So I'd say 15 is, we'll say an average on the big squares, between 3x4s and 4x4s.
Okay. And that was my next question. In your area, is it more 4x4, more 3x4, or is it just a preference thing?
Some of it's preference. Some of it depends on what their trucking situation is. If they're having to truck hay a significant distance, a lot of them prefer the 3x4s. If they're pretty close to the dairy and they're not having to worry about trucking, they'll bale 4x4s, especially if they're baling on the dairy. It also depends on what they're baling as to what their preference is. We have guys that'll use a 3x4, 4x4 for either one, but I will say 4x4s have probably come down in popularity over the last few years compared to 3x4s, mostly from a handling and shipping perspective.
Right. So the actual size of the baler in your area with what your operation looks like doesn't really affect the resellability, right? You can't point to one as another. Or
it does, because with 3x4s gaining more popularity, the 4x4s are becoming less desirable. You have the guys that are still going to buy new. They've always run 4x4s. They're only ever going to run 4x4s, especially alfalfa guys. But your secondary buyer, a lot of those guys are probably trucking a little further. They're not on their own personal farm. They may be more custom based. And so they're looking to have to truck hay. So they're more into a 3x4 baler. So your 4x4 resale market is definitely dwindled. Haven't really found much of an out as far as export on 4x4s comparatively to the 3x4s that we've seen.
Right. Is that a cyclical thing? Because sometimes this bale size thing, you'll see something comes to vogue for a little while, and then it goes out of vogue, and then back and forth. Is that some cyclical nature of that?
There is some. It's been really a lot of we'll say drought dependent on as far as when our baler sales are up versus down. But overall, yes, very cyclical. But even still, the overall the 3x4s are still inching up. Even though 4x4 some year are more popular and 3x4s are more popular. Overall, the 3x4s are still inching higher over the 3x4s in popularity.
Right on. Okay. So let's switch over and talk a little bit about, in order to get the hay on the ground, you got to have a windrower of some kind out there. So as you're looking at that marketplace, are you seeing, obviously probably with your custom guys, obviously you're seeing a lot of self-propelled stuff, but as you look at some of the pull type stuff, are you seeing more pull type action on sales wise? Or are you seeing more guys still looking for that, maybe that late model used piece or that older used piece on the windrower side?
I think the pull type has been pretty steady, especially in our area. We've got a lot of guys that have kind of smaller oblong fields, not big wide open irrigated pivots. So the pull type's still a pretty relevant in our area, and we still move those pretty consistent. They're more this time of year. It's pretty typical to sit on them late spring or late fall into through the winter, but they stay, I'll say, pretty consistent. The self-propelled market, though, has definitely slowed. Inventory is definitely up in the self-propelled market. Whether it's, we've got them in all ranges, everything from 200 hours to 2,000, 3,000 hours. A lot of that is price point on some, but there's also been a lot of really nice units that have hit the auction block. We've had customers tell us, I'm going to wait and see what this one sells on auction for before I commit to yours. And then they'll come back and say, well, that one sold for X. I think yours should be worth X. And so that drives a little bit more to sit. But the values definitely have changed rapidly. Yeah.
When you were looking at the auction market, which was my next question, you start looking through that, you've seen a steady supply of stuff come through. You guys had some stuff you put on auction. I've watched a few of those things sell. As you're looking out through 2025, what is your feel for the auction market right now? Do you feel like you see some strength in that, or do you feel like the numbers I'm seeing show that there's a little bit of nothing's going through the roof, right? But it kind of seems like things are solidifying. What are you seeing?
I agree. I think that the auction values have definitely strengthened on equipment, on hay, particularly, especially this time of year. Getting into spring, guys are getting a little more excited to buy. So I definitely think those values have strengthened compared to what they were in September, October timeframe last year on the hay. What is going to be, I guess, the stronghold is what's that going to be after April once everybody's really in the field and cutting? Are these preseason buyers that are driving these up, or is it going to kind of remain on a steady incline, or at least level out through the remainder of Q2 as we get through first cutting?
Yep. Yeah, I'm interested to watch. This is probably one of those years. I keep looking back at 2017 and how it shaped up comparatively coming out of 14, 15, 16. 17 was the year where everything kind of settled in and kind of found its footing, got a good bottom on things, and then 18, 19, and then 20. Then obviously we had COVID and things went off the rails, and it was just a crazy amount of stuff happened during that time frame. But it kind of feels like that, where you're seeing 25 kind of be a solidifying point. The one thing about the marketplace I'll say that I feel has changed over the years I've been in this business, the thing that I've seen change the most is that the high highs have gotten higher and the low lows have gotten lower, and they've compressed, right? So you have a shorter window for the highest of the highs, and you have still a short window, all things considered. But man, is it violent in there when things go sideways? Yeah. When you're looking at this, do you feel like 25, 26 is going to be, as things kind of progress through 25, we're going to see some uptick in 2026 as far as new orders go, as far as moving of used equipment, those kind of things?
I definitely think that it'd be later 25, is my opinion. I think we're going to get to the end of the year. We'll see what these government subsidies are going to be and what the net farm income really comes up to. But I think going into 25, later 25, early 26, I think you're going to have some guys that have definitely held over and not traded. They're going to get to either a need to trade from a tax standpoint, or their parts and services going to maybe fill that void on that trade difference just a little bit more, running that extra year. A lot of the new buyers are still the guys that are just adamant about trading pretty regularly, have kept that. But we're seeing a lot of quoting, guys just kind of holding off, though. They're just not pulling the trigger. They're not buying elsewhere. They're just not buying yet. And that's why I think we get a little closer to 25 and we start kind of leveling out on values, whether it's us as the dealer leveling those values out compared to what we had, or the market stabilizing just a little bit. I think we'll definitely see an uptick through year-end buyers, and then some Q1 first of the year buyers getting into preseason for next year.
For sure. I agree with 100% what you just said. It feels like late third quarter, early fourth quarter is kind of when I'm going to really start paying attention to what's happening more than anything else, because that's when that time frame is going to take off and run, in my opinion, and it's going to feed into 2026, what that looks like. One other thing that I've been paying attention to, and I'd love your feedback on this, is that obviously all the manufacturers have really pulled back on manufacturing capacity, right? They've laid off people and cut their forces and all those kind of things. Last time this happened was out of the Great Recession, and we saw that 2009, 2010 time frame. The market kind of came back around a little bit. It wasn't it rebounded fast, kind of especially on the ag side. As you watched that take place, there's about an 18-month lag before the manufacturers could really get back in. And during that time frame, used equipment, what was available really sold fast, because that was your choice, really. If you wanted to order something, it was 9 months to a year out at the time. And so it's just, if you needed something for a tax purpose or machine went down or something like that, that was kind of your choice. I'm anticipating to see a similar reaction to where 26 and 27 are some high used equipment buying periods, but it's going to be, order writing periods for, 2026 for 27 delivery. And then the same thing again, the 27 order writing period for 28 delivery. Those are going to be some peak times. All that being said, the price of equipment today is not going to change. It's going to get more expensive as we keep creeping down the path here. Even if you're doing 2 and 3% price increases, that's real money anymore. It's not just a few $100 like it used to be. As you look at this, are you feeling something similar to that? Do you feel like there's going to be that little bit of a lag to where there could be a window there where used equipment takes off and runs a little bit?
I would agree with that. I would say yes. The only caveat to that is that right now new inventory levels are still high. I mean, a lot of dealers have pushed inventory through the auction markets over the last 18 months to kind of try to right size some of that inventory. I think we still have quite a bit of inventory on the ground. We're not out of used inventory by any means, but it'll have to be a good mix of how much we can wiggle through what we have remaining on the lot as far as new inventory, and be able to push that used into that secondary buyer. A lot of your new buyers are still going to continue to buy new, but it's getting that secondary buyer to come up and step up to take these pieces. I definitely think there's going to be a lag. We've needed a market correction. I'm not saying I ever want a bad market. I'm not saying that's ever good. We don't like the lows, but coming out of COVID, we had to have something to kind of reset our levels a little bit. And unfortunately, I think it hit us a little harder and a little faster than what we were all hoping for, expecting. But I think it would be a very welcomed correction to have that need for the used to be able to be a little more relevant than the new has been over the last few years.
Sure. Yep. And I think I think exactly what you just said is the same thing that I'm thinking about too. It's just, there's that correction space we had in there. We saw that we knew the correction was coming, right? We saw it coming down the path, and we just knew that there, because ag is one of those things where you get to see all the bad stuff happen for a year and all the good stuff happen for a year before any of that stuff becomes a fruition into the marketplace. And I think we're seeing that kind of a little bit on the other side now, where we're starting to see some good things happen. But again, it'll be 12 months before we really get to see the fruits of that labor, be able to be harvested. All right, let's jump over, talk about real quick what you see happening on the tractor side of your business. So that 150 horsepower to 100 and probably 200 horsepower loader tractor, and then let's take a look at your 200 plus to like 300 horsepower tractor, and it's because, again, big square balers are going to be 235 to 285 horsepower tractors for the most part, depending on the size of what you're looking at. But as you're looking at loader tractors, this is the one thing I can't get my head wrapped around, why loader tractors are, at least from what I can see out there, is you think there'd be a little more demand for them than there is, just because where cattle prices are, but it's just not there. So what are you seeing on that front?
Exactly that. Our bread and butter tractor is a Fendt 700, and they have been our absolute slowest mover lately. Even guys that are at a typical 2.5 to 3 year trade cycle are slowing down. It's kind of tough to say what drives that, but we've looked at it from an interest rate perspective. Is overall price? We have found that price is a big factor in that, probably more so than overall interest rate is. But that loader tractor market for whether it's a guy baling hay, a guy feeding hay, just hobby farm, any of that, they're very slow to move right now. And surprisingly enough, interest has not been as big of an issue as just overall price and payment as a whole.
Yeah. And the same conversation you just had with me right here is the same conversation I've had with green, blue, other green, everybody, just across the board. That loader tractor it's just a slow mover for everybody. And it's a head scratcher, because that should be, with cattle prices the way they are, that tractor should be a little more, not sliding off the shelf by any means, but it should have more movement than what it's doing.
Yep.
And then, all right, so let's talk about, as you look at your 200 to 300 horsepower range tractor in there, what are you seeing there? And are you having, just because of where everything else is settling, you see any light there where more people are coming to the table for those?
No, I think our quoting activity there has definitely picked up, but there's no urgency on the customers to buy. It's good that the sales team's out quoting. It's nice to have that, but again, there's just no urgency to buy. And trying to figure out what's going to drive that urgency or create that urgency. That's kind of where I say that interest hasn't been a big player, because we, offer lower interest, buy down interest, whatever that is. And that's not ticking the box. So still trying to figure out what's going to tick the box, try to drive urgency. But right now they're moving just as slow as our average loader tractors are.
Yeah. It's been a very, 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 just like what you just said, right? Plenty of activity. It's just getting people to cross the line. It's the other side of that. Okay, man. Well, Timothy, I appreciate you taking time to be on the Moving Iron podcast. If folks want to reach out to you, what's the easiest way to do that?
You reach out to me. My email, it's timothy.walden@parallelag.com, or you call any of the stores and they can transfer you right to me.
Right on. I appreciate you being on. Forward to seeing you soon. You've been to Moving Iron Summit several times, and talk to me a little bit about why you think that's such a good event, and why you come each year.
I've made more contacts and being able to meet and talk with people face to face this used equipment position was a new role we created late 23. And so coming in and being able to have just conversations with guys of how they've been doing the business, what works, what doesn't work. And, when it comes to looking at off-brand stuff, being able to make those connections with those dealers that aren't your brand, they may be John Deere, they may be Case, they may be New Holland. Being able to make those connections and be able to bounce ideas off people, what maybe rough trade numbers are for somebody that's completely out of your area. I mean, obviously, if you call the dealer next door, they're probably not going to give you a whole lot, but being able to call somebody halfway across the country that can help you is worth its weight in gold. And that's in both ways. And so made some very good, longstanding friends through that, and people that definitely we want to help each other succeed. I'd say that's probably the most beneficial thing I've gotten out of Moving Iron is just getting everybody together to be able to talk and communicate and help each other.
Yep. Yeah. That's the biggest thing I take from it every year is I get to see all the people that come in and we get to talk about the same stuff we just talked about. But every conversation I have is just similar to what we just had. So it's a good time to sit down and hear about what's going on in each part of the world, because, you find some areas that have similar relationships as far as similar crop practices, similar, growing patterns, those kind of things. And you get that opportunity to build those relationships with folks that have, a like need in what you're doing. So it's by far and away worth the time coming to that. So Timothy, I appreciate it, man. I'm glad you can be on, and we'll catch you again next time.
Yes, sir. Thank you. Appreciate you.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.